Good morning and welcome to our webcast on the final changes for taxes in Mexico for 2014. This webcast was originally programmed for last Thursday, and as mentioned in our note, we had to change due to an unforeseen issue. The unforeseen issue was a baby girl named Viviana, 3.7 kilos, around 8 pounds. She didn't give her mother and I very much notice, so we're sorry we had to change the date there. We will be discussing this subject for approximately 1 hour, and we'll have 15 minutes for questions and answers. You will see on the right-hand side of your screen there's a tab that will open for you to ask your questions. We suggest that you send them during the course, and they will be addressed in the Q&A session. The recording of this webcast, as always, as well as the slides, will be available on our website or upon request by email. Some background here. The equivalent of the House of Representatives for Mexico passed the previous version, which we gave a webcast in English on October the 8th. Many of you would have joined. The Senate came in, the Mexican Senate came in and modified things. And this is the reconciled version that was passed to the President the 29th of October for the federal tax code and the 31st for everything else. It hasn't been published yet by the President, but the last thing he would do is veto his own party's bill. So it's guaranteed to go into effect 1st of January. They've basically been too focused working on the expense side of the budget to do pretty much of anything else. So once they're done with that, then I'm sure they'll be publishing it. Now, the first thing is that there's a new income tax law. And that's important in Mexico legally because it clears the deck for anyone that had a lawsuit, and it resets it for all the court cases on specific issues that would have been in trial, so and potentially lost. So it kind of resets everything for the lawyers, so all is not gloom and doom. Now, what you'll see is that there are very important modifications for value-added tax, for the special tax on services, the YEPs, and the federal tax code. And all of this is basically dedicated to clamping down and getting rid of tax evasion, where there is a substantial problem in Mexico for tax evasion. Now, the one thing that everyone did note is that the flat tax and the tax on cash deposits are eliminated. Now, the first one is very good news. The flat tax has been a bane for taxpayers. Having to control your cash flow very carefully, you get paid at the end of the month, and it turns into a hot potato contest of, well, the client pays you at the end of the month because they don't want to enter into flat tax because it's cash flow based, and then you turn around and have to pay all your suppliers so that you don't end up with negative flat tax position, and so on and so forth. They get rid of it and do not substitute another type of alternative minimum tax, or AMT, which was the recommendation. The OECD always told Mexico in its recommendations, the flat tax as a control mechanism is not a bad idea. Change some of the mechanics of it. The IRS had been studying it and studying if it was a complementary system within the income tax law and should thus be creditable for U.S. tax purposes, for example. It was still in study. They hadn't decided on it. If they had ruled on it, they would have probably ruled that it was not an income tax and not creditable. So it's a good thing they got rid of it. But it did give many taxpayers pause in certain strategies that they put in place. Now, as we'll see, some of the effects that the flat tax, especially regarding fringe benefits, which were not deductible for flat tax, what we'll see is that the government, through the income tax law, incorporates some of those mechanisms so that the hit to the government coffers isn't that bad. And lastly, the cash on deposits, which was not an unpopular tax. The cash on deposits would affect only informal taxpayers or non-taxpayers that handled everything in cash and didn't pay taxes, and they had to pay 3% cash deposits tax, but they got it back when they filed their federal taxes. If they didn't file it, then they didn't get it back. But at the end of the day, if you're Starbucks or McDonald's or whoever, then you wouldn't have an issue. Now, the federal tax code. A lot of attention is focused on the major changes in VAT law for the border regions, which go up, as we'll see. Taxes for sugary drinks, high-calorie food, the famous Bloomberg taxes. But what can many times pass undetected are the changes to the federal tax code. Many times these are more worrisome than any of the above mentioned. These all tighten things and make the stick the authorities carry bigger, and in theory should attack companies that are not paying their taxes properly, which is of course a good thing. Now, the efficiency of the tax administration will have to increase, and one of the things that we do foresee with all the added information that they'll have, everything's electronic, is that audits will increase as the government has a more scientific and targeted and automatic approach to things. It's more automated, much less dependent on individuals. So what that leads to is you really have to be on the ball. Both of these are tightening screws to avoid tax avoidance. Now, the first thing is tax address for account statements. In the case of taxpayers who have not registered an address with the tax authorities or cannot be located, and this sounds very simple, but there are legal reasons and legal technicalities that people got out of, were trying to hide from the tax authorities. And with this, the government can consider any address that you've given a bank for them to send you your bank statements to be your tax address if you're not located, if they can't find you. So that should attack the problem of people trying to skip town and not pay their taxes. Secondly, regulations for the electronic signature. And this has to do, I believe, with cases where the person is materially like they have some disability, they can't actually go to the government offices to do the filing. Well, it could be done for them. Now, these three items are very interesting. The first one is anyone wishing to open a bank account in which they will receive deposits or carry out operations that are likely to be taxable will have to be registered with the tax authorities. So the bank, the interesting thing will be here, the bank will ask you for your tax ID if you should be registered. And we'll have to see how the banks apply that, because let's say I deposit money to my wife to pay for the Huggies. She doesn't have to be registered just to receive that payment. Now, what will happen? Will the bank ask her to be registered? Her, and if I deposited to my grandmother, would my grandmother have to be registered? So we'll have to see how the government and the banks try to enforce this. And obviously the idea is if to avoid people using the banking system when they are not registered for tax purposes. The same way, for example, in the US, you need a Social Security number to open up a bank account. Now, interesting will be also what happens with expatriate employees. If I'm a foreigner, the law talks about people who should be registered. So if an expatriate from a car company that comes down with all the auto boom, if an expatriate comes down, will they be asking for that tax ID? So all of it is in line with clamping down on people not paying their taxes, which again is a good thing. Now, the second one, this strengthens the case of the authorities procedurally for taxpayers that avoided handing over bank account statements as they weren't technically, and remember that Mexico is very formal, and if I don't have the faculty conferred to me within the law, then the auditor can't request it. So by adding bank account statements in the federal tax code as part of the accounting, now the taxpayers have the obligation to hand those over to the government. And I think the takeaway here is that the always have your original bank statements available. If you get them online, like I think at the end of the day, if you're an honest taxpayer, and if you ever needed the bank to corroborate, like you get your bank statements online, you save them in PDF files. If you ever needed the bank to reprint them, I'm sure you could get the bank to reprint them and to attest that they are original or valid representations of those copies. Now, regarding the last point, the accounting, the thing to note will be to, in as much as possible, have the supporting documentation at your legal tax address, because the new rule is you should have all the corresponding supporting documents have to be kept at the tax address. Now, the risk is a minimum fine if detected by the authorities. But this would be, for example, the case of companies that have things at Iron Mountain. A lot of times, or companies like that, a lot of times storage of very old files where you keep them for 5 or 10 years can be quite burdensome for a company. So you outsource this to a company specialized in that has sprinkler systems and security, and they usually do a much better job than you do yourself. So at the end of the day, our general feel is that for good companies that comply with their taxes, you really aren't the target market that the government is going after here. They're focusing more on the delinquent taxpayers that try to argue that their information isn't there in order not to pay, which wouldn't be your case. If a minimum fine of, say, $600, $800 is levied in a direct, full-fledged audit, right, where you have a team of auditors come into your office, there are 3, 5 of them, and I'm not saying that getting a fine is fun, but it's not necessarily a bad thing, as it gives auditors something so they don't go away empty-handed. In Mexico, as in anywhere, auditors have to be productive, and we have found that if they don't find something, they continue their scope so as to nitpick whatever they can, and it ends up being not cost effective to the company to fight them, even if you are in the right. So these type of fines sometimes pave the way for an easy exit, an honorable leaving of the auditors, where they can go back and claim they got something for their 2-3 hours of work and move on to the next company, which hopefully for them will not have paid their taxes on time or have many other issues which you don't. Now, two other items, and these are, one turns off the faucet of invoicing, which is the digital stamp certificate. Now, these are the digital stamps that you need in order to be able to invoice. Now, remember, in Mexico, all your invoicing is done electronically, and you have to have an electronic key that the government gives you. Now, that electronic key, which is the digital stamp, the government will be allowed to turn off your digital stamp if you have 3 or more consecutive or 6 or more non-consecutive tax filings not filed, provided that there has been a requirement notice given by the authorities. 2, the taxpayer cannot be located. And 3, invoices for inexistent, pretend, or illegal operations are issued. Now, one of the things that you'll see as a common theme in a lot of these reforms is that the Mexican SAT, the tax administration, has a big problem with people that buy invoices. So they simulate operations, and this happens lower down the food chain. It's prevalent in certain industries, and there is a culture of tax evasion among certain people. So the government changing that type of mindset, which is something historic, over the years has tightened and tightened and tightened the different control mechanisms it has. So what you'll be seeing is a common theme of, I'm leaving the articles, the law, in order for me to be able to really shut down anyone who I suspect of doing this type of activity. Now, the second thing, the new online accounting system, is an online accounting system. I mentioned it in our last webcast. No one knows what it's going to be looking like. And the funny thing is, of course, that this is to go into effect in January and would have to be filed in February at some point. I don't remember the date. And the rules and procedures are not yet available. I tend to think they'll end up pushing it back a couple of months, but we will see, and we will definitely have a webcast once the information and how to proceed is clear. It will likely be a standardized chart of accounts, something similar to the My Portal system that they had in place. And what the government wants to get to is being able to get to an automatic filing. Now, the moral of the story here for both these items, both the digital stamp and the new online accounting system, is it becomes ever more critical to be up to date, first on your accounting. Like obviously, the base of your taxes is your accounting. First, to be up to date on your accounting. And secondly, based on that, all your tax filings. No filing in zeros, none. Those will be red lights. Like if we have problems where we can't get the month closed, let's say earlier than the 10th, 12th of the following month, that's going to be a problem. Like the government has guidelines as to what it sees as dangerous or risky behavior, and that increases your likelihood of an audit. So we're really going to have to work on timing if producing the information is becoming complicated. Now, what does the government want out of all this? What the government seems to be wanting to get to is an automatic tax return based on your filings. Because if every month you file a balance sheet, income statement, and it's pretty detailed, they could, according to their criteria, generate your tax return. It's almost like they want to get rid of your accountants out there. But wait, that can be fine for a small company with no operations, maybe. But do you really want the government being your advocate? Because of course, if it is in their favor, great. But if you miss something that would have increased your taxes, you are definitely not off the hook. You would still have filed your taxes incorrectly. So when it's in their benefit, great. When it's not, you're dead anyways. Now, the buzón tributario and in Mexico, historically the postal service has not been great, and it's one of the reasons why FedEx, DHL, and all UPS and all these type of companies have a great business. It's supposed to be getting a lot better, and letters do arrive much better than they used to, but the government is kind of bypassing, leapfrogging over that and going straight to digital. And it's part of their global strategy of the more I handle electronically, the more that's based on systems, the less contact you have with people, the better. So this buzón tributario, the tax mailbox, individuals and legal entities registered with the tax authorities will be assigned a tax mailbox, which consists in an electronic communication system located in the tax authority's website, kind of like a portal. Now, through this system, the taxpayer will be notified of various documents and administrative procedures and will allow them to file promotions, requests, notices, or fulfill authority requirements or requests through electronic or digital documents. Now, we talked about in this system in the last webcast, it sounds very modern and efficient, but it will first of all be modern and efficient for the tax authorities to the detriment of taxpayers, where you could potentially fall foul, for lack of checking an email, a spam filter, and not know that there is a tax notification due. You'll also be able to carry out consultations regarding your tax situation, contest authority procedures, which will facilitate the fulfillment of tax obligations. Again, all this in favor of the tax authorities. Requirements regarding refunds will also be notified through the system. And some of this is real efficiency savers where, like, we have clients that are in big industrial parks, and sometimes just the fact that the security guard will not let a person from the SAT notify a request that I'm missing some information or I have a question on this or that. They don't let the person in the door, and so you never get that request, and so the refund is rejected. Now, if all this goes electronically, that should go away. Now, I think the best practice for all this will be to set up an email which gets sent to 3 to 5 people. So one email, but you set up the address so that 3 to 5 people, let's say someone at the company, 2 or 3 of us, so someone will see it and get it, and make sure your spam filters have the domain that these notifications come from as always authorized, so that they're not going into your spam filters. So this will be important to take note of when it goes into effect. Now, the good news here is that the buzón will come into effect for corporations as of June 30th, 2014, and for individuals as of January 1st, 2015. So we do have some time to set this up, set up the procedures, document them, and be ready for this change. Now, the other issue that will be you'll have to take notice of is that taxpayers will have to review the information sent to this tax address or tax mailbox within 3 business days of receiving the electronic notification sent by the tax authorities. If you don't look at it, it'll still be considered valid. So the government has 3 days, and after that, it's considered valid. This next one, and this is actually one that they changed from the original version of the House. Originally, the corporate veil for tax purposes would have been pierced if basically in any situation. So for tax purposes, and which was mind-boggling and pretty much goes against common sense. And in this case, what they did is they say the liability, because if I have a limited liability company, an SA to CV, an SDRL, where the liability is limited to my capital stock that I gave to the company. And there are cases where I can have, in the case of the equivalent of the LLC, the SDRL, it can be a capital of $280 US. Now, if I have 99% of that capital, and that's all I have, the liability, if I do one of the following things, then the government says, forget it. Like, you can only have maybe $300 worth of capital, but I'm going after the shareholder. I'm going after the person who ends up benefiting. So if you don't register with the tax authorities, if you don't notify a change of address while under audit, so anyone who's under audit, that's a very delicate item. Anytime you're under audit, does not keep accounting, hides it or destroys it, leaves the occupied premises without notifying the tax authorities. And so if I have 99% of $300 worth of capital and there's a $10 million tax bill, then I would get 99% of that tax bill. So as a general rule, no J. Del Rio client will be here, so not to worry. It's not targeted for you. It's targeted to companies that don't pay their taxes, that create shell companies and then walk away and then try to get out of things just by saying, okay, well, I'm only responsible up to my capital. Now, one interesting thing would be, of course, if we have a foreign corporation, and by foreign I mean outside of Mexico, as a shareholder, and I leave this as a question, it would be very interesting to see how the Mexican tax authorities could try to piece the corporate veil outside of their jurisdiction. So perhaps the recommendation will always be not to have individual foreigners be shareholders of a Mexican corporation. Now, invoices, and we'll be having be having a specific webinar on this subject, which we'll talk about at the end of the talk in December, both in English and Spanish, the same day, different time, where we'll talk about all the options, best practices, etc. So if you handle AP, accounts payable, from outside of Mexico, this will be especially important for you. The 5th of December, I'm told. So we will definitely be sending the invite to all the participants about that because with the changes to invoicing procedures, this merits a course all on its own. So we didn't want to bog us down just going over the invoice and have a 3-hour webinar. We rather to split things up a bit better. So if you do handle AP from outside Mexico, it will be interesting. If you're involved in the accounting in Mexico from outside of Mexico, it would be important for you to understand the rules. Now, this one is important. The refunds, reimbursements, bonus discounts will all have to be supported by a CFDI. Now, many companies have this as a common practice, where you have sale of 100 minus 10, and this is all on the invoice, net sale of 90, and on that 90, I charge the value-added tax on 90, and that's my total amount. So it's a typical practice. Now, as of 1st of January 2014, that wouldn't be acceptable to the tax authorities. They wouldn't want to see it that way. They would want to see, okay, I'm going to sell 100, and then I'm going to have a credit memo of 10. So 2 different documents for that same operation. Even though, like, commercially, it sounds better to say, okay, I give you 100 minus 10, and it's all on one document. So if anyone has that case, please do that change. If you have any questions, please let us know. Printed invoices will no longer be valid. These will be able to be used to prove existence of the operation, but will have no tax validity. And we'll go into this in more depth in our webinar on the 5th of December. But the need to have, especially if you ask for refunds, especially if you're talking large, like a large dollar or peso amount, is have the XML files for the electronic invoices kept centrally, attached, if possible, electronically to the voucher. Many systems can do this. If your system can't, maybe there's a plug that you can add so that you can actually attach these and be able to know that you have all the CFDIs attached with the XML. And I know I'm talking kind of jargon here, but the XML is the electronic file. So the invoice which you can print out in the PDF is just a physical representation. So again, we hope that the government will realize that that in the end, not everyone, and especially like the more you go into small towns in Mexico, the sophistication just isn't there for everything to be electronic. Like no one is, very, very few companies are totally paperless in Mexico. So forcing companies to have the XML files for all their deductions, because on the sales side you won't have any issue, but on the deduction side, tracking that to make sure that you do end up in your accounts payable procedure recovering those XML files can be quite a logistical and administrative burden. So it's definitely a good idea to attend our webinar and see what the best practices are, because at the end of the day, if you're a good taxpayer and you're not looking to not pay your taxes, you can still get caught on offside for not going through the proper procedures. And lastly, the taxpayers will be able to verify the authenticity of CFDIs that they receive through the tax authority's website. Okay. The statutory tax report, this is the famous CPRID, goes away and will only be an option for companies that attain income over revenues for the previous year over 100 million pesos, have assets over 79 million, or employees of 300. Taxpayers that choose the audit option will state it in their annual tax return, and the audit is to be filed at the latest July 15th. Now, for companies, like instead of the audit, companies will have to file an informative return the June 30th, and it'll be companies that are large taxpayers, over 600 million pesos of revenue, entities that carry out operations with foreign tax residents, which would be, well, all our clients, and the taxpayers that choose the statutory